Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 27th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES has gotten a full-on breakout to the upside from the range that has developed over the previous month of trading. Right now we are holding just above the breakout point here and right at the previous sessions, or just above the previous sessions highs of 30.1975. A bit of a range has formed above 30.20, so if there's any failure to hold 30.20, perhaps that could lead to a bit of a rotation back toward 3K. But again, as I mentioned before, 29.80 is going to be very, very important. As long as price can continue to hold above 29.80, this market will likely continue forging higher. There is one zone here that you do want to watch, and it's that 30.30 level from a higher time frame standpoint. 30.35 is today's high, and one of the levels we've been watching here is for a test into 30.30 because it puts us right into the upper end here of the previous price distribution, and that's right where we are right now. 30.35 today's high, and anytime that happens, once price pushes back through this price distribution, there is a tendency to swing back across the range. That would mean a return as deep as 2,700, followed by perhaps a bounce back up, and then we trade inside here a bit as we did before. Now, if price were to push through 30.30, you start to open up the next zone above, which would be 30.30 to 30.34. 30.50, right? Starting to find acceptance above that zone would suggest a transition to the next market distribution higher. But right now, got to continue to watch 30.30. If there's a failure to hold 30.20 today on a short-term basis, that could rotate things lower. But really, nothing bearish really starts to happen until things start to break back below 29.80 in the ES on a short-term basis. Okay, let's take a look here at the NQ. What you'll see with the NQ, we've had a perfect rejection in the previous session, and then we had a perfect fade after rejection, and now retest after rejection. So what I mean by that is, here's the previous day right there, a nice rejection day where you had a tail at the upper end of the day. It happened at the previous week's high as well, and you can see how price has rotated back down after hitting 9,600, 9604, and in the previous session here, or after hours, price rallied back to this rejection day midpoint. That was the overnight fade back to that point, and now bears looking to push this thing down further off of this high right now are defending 9,500 for a shot at pushing this thing back toward 9,100. The reason I point out 9,100 is because on a 3-day range basis, that's how long these pullbacks have been, these rotations on the counter trend edge here, from here down, here down, here down. It's been 3 days, top to bottom, and the range has been about 500 handles each and every time. And we know that because we can quantify it down here with my indicator, the PivotBoss Advanced ADR indicator. You set it to 3 days down here, and it quantifies it for you. And right now, the target would be 493 points from that high, which is 9,600. So call it 500. That gets you a 9,100 target over the course of 3 days if this is a counter trend rotation. If it's not, we will know by price pushing through this midpoint and closing beyond it today. If price finds acceptance through that above that midpoint, it opens up a further squeeze higher. So right now, that midpoint is going to be very important. That is 94.88. Call it 9,500. 9,500 is very important here today, and a failure to get back above it could rotate this thing down toward 9,100 on a near-term basis. Any rotation to 9,100 could be a great buy the dip opportunity for another rotation higher, as has been the case throughout this entire move higher since the March lows. Okay, let's take a look now at crude oil. You'll see here with crude oil, we're in another narrow range here. We had formed a nice rejection day in the previous session here. It was a failed low. After it took out 3-day lows, it bounced back up. Yesterday was a midpoint retest and digestive day. Today, more of the same, inside day, very narrow day. Today is crude oil inventories as well. But overall, ever since this transitional day right here back at the beginning of May, or the day before the last day of April really, this thing has been straight up. That was a transitional day. May 1st all the way up throughout has been straight up for crude oil, as we are now trading 33.86. So the idea here is that as long as price continues to hold 32s here, there is a shot to not only finally hit that 35 even, but perhaps even push through it toward 40. So right now, watching to see how that plays out. Any failure to hold 30, 32 especially, but 30 down here would open up quite a pullback here of some magnitude. But at the moment, still pushing higher until we find that strong pivot high. All right, let's take a look now at gold futures. With gold futures, we've seen this thing rotate back and forth within the current distribution here, which spans from 1675 to 1775. That's basically been the distribution. When we got very narrow in here, we knew that we were building energy for a likely rotation higher. That's when we got long here. But then when we got the rejection here and failed to hold 1765 intraday, we mentioned we could see a bearish day ensue, and that led to this bearish outside day, which has now been the top ever since we've been slowly working our way down. Yesterday I did mention we had a big test coming at 1700. That was the low of the day yesterday, 1700. It's since we've had a rollover gap, and now price is hanging out right here. So we're still inside the range, and will likely continue to trade within the range. The edge is not the middle. The edge is literally the edge. So there's no edge at the center of this range. You have to wait till price gets to an edge, and then it's a fadeable opportunity, whether it's one edge at the top, fading it back to the middle, or at the bottom, fading it back to the top and middle. You got to wait for an edge right now. Overall, the market continues to trend up, but look at this compression that's formed at the key range high. That typically tends to be distribution, which could then lead to a rotation back to the middle of that range, 1575, and the bottom, 1450. So I would keep a big time close eye on that 1675, 1670 level, because a violation there could open up quite a bit of selling pressure down the road as we've built out a range over the last 2 months at these highs. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.